as best we can. So give you guys a little more insight into what we're doing over here at Forex League.
Except for you, Jay. For you, Jay, yeah. Yeah, UJ is gonna be it's gonna be interesting. You should
Well,
you should definitely, if you guys aren't already, in the Discord chat, we're gonna go over this, at the end, but definitely get in here, get into the chat. We just posted all of our analysis,
yep.
In here. So if you're not in here, how do you know each other? If you're not in here, definitely get in here. Yeah, we'll answer that. We'll answer that too, Meet. We'll go over that too. So yeah, in here, we got public giveaways are going to be in here. Giveaway was today or yesterday. Forex is doing really well. Everyone's sharing their ideas in here, which is really cool. Analysis. So this is just me and Nick's analysis, and we'll update these, as the week goes on, as we see here. And then crypto, people are dropping some crypto charts in here, trading over the weekend. And then these are our paid channels, which we'll go over, towards the end.
All right, so we just got 40 people in here now. Let's get started on these questions after this, if you run through this Discord. So
let's get started. We got about 40 people in here, which is definitely, a good amount. So I appreciate all you guys for coming down. So let's get right into it. First, how did me and Nick meet? So I was just talking about Forex actually at the gym. A friend was asking me what I was doing, and he was like, oh, my buddy actually trades Forex, and I had not known anybody, that previously traded Forex. So I was like, I asked him what his name was, whatever. And, he gave me Nick's name. I hit him up on LinkedIn. At the time, I actually didn't know too much about Forex, and Nick had known a lot. So I tried to connect with him. We weren't able to connect at first. But sooner or later, we were able to circle back and we were able to connect. And he actually lives one town over from me. So it kind of worked out because he was so close. So you can talk a little bit about, getting a trading buddy and, why it's good to get one.
Yeah, I mean, absolutely. That in itself, so Angelo went and, learned Forex before we, reconnected. And then once we reconnected, he had a lot of knowledge so we could actually talk on the subject. And that kind of collaboration with a trading buddy, you bounce ideas off each other, you share analysis, you backtest together, and you basically just immerse yourself in Forex through conversation with someone. And it really just solidifies everything like the basics, the fundamentals. And it's always better to learn from someone or with someone, right? Two minds are better than one, in every scenario. So
yeah, for sure. And I'm just trying to find this music. And going off of that, basically with me and Nick, what we were doing when we first started hanging out, because we weren't, just starting Forex League the first time we hung out.
Right.
Pretty much we were back testing. At the time, I didn't know key levels too well, and Nick did. So he was showing me different ways that he looks at key levels. I was presenting my own ideas. At the time, I was showing him sort of how I looked at things from the person that I learned from. I know this is one of the questions. I guess this kind of goes right hand in hand with this first question. I learned from someone on Instagram. Many of you might know his name is Q Banks. So that's where I learned from, Wall Street Academy. Nick, you can maybe talk about a little bit.
I learned from a bunch of different sources. I never really had the opportunity to learn from a mentor that actually knew what the hell he was talking about. Other than like a scammer or something. So I've been through it. I've been through, fake mentors that are complete scammers, people who really don't know shit that try and share ideas with you, baby pips, YouTube. And it took me 4 years of just finding all these different resources to really learn, which is not efficient at all because it just takes so much time. So obviously the best way to do it would be through a mentor. But that's how I learned. I did it pretty much on my own, and then collaborated with Angelo, and things just took off from there. So no hat on. Yeah, no hat, Dan. No hat.
What's up, Danny? Yeah, no. So obviously, with Nick, he felt as though he dealt with some scammers. maybe talk about, a little bit about the scammers and how you dealt with them. Because
Right. So I hit the Forex scene early, right? There wasn't really too many guys on Instagram that were selling a course or even teaching Forex. There was, I mean, Astro was around. I think their company was a year, or they came, I learned for a year and then they started their company. So they can't, I saw them. I saw a couple other guys that have disappeared at this point. And then the one guy that I happened to, try and learn from. And, they did like a scare tactic, like we're only going to teach 50 people or whatever at first. Which is a red flag in itself because it's a scare tactic. He's saying that he's only going to teach so many people how to be successful, and he's promising all these things, all these false claims, and that's a red flag in itself. If something sounds too good to be true, and he's not really telling you what it entails, like because Forex takes a lot of work, a lot of practice. You need good discipline. You need to practice. He wasn't really telling us any of that. He wasn't telling us risk management, anything. He was just showing his Lambos. He actually ran an MLM company, which is where he got most of his money. So he wasn't really even that good of a trader. But he led on that he got all his money from trading. So again, very scammy feel. He's just flashing a lot of things, saying that you can make this much money. You can start making $1,000 a day, like all this crap. And it just didn't work out. I was trading with him, following what he was saying for a few months, and I was just losing money. And I wasn't really learning anything from him, and it just wasn't beneficial. So I cut my ties there, tried to learn from other people, other sources. And, it's a tough journey. I mean, now there's so many resources through social media on how to learn how to trade. So definitely utilize them. Like this right here, there wasn't anyone really doing this, hopping on, answering questions on Zoom. Didn't have no Telegram chats or free analysis. This wasn't available when I started. So definitely take advantage of it.
yeah, I also saw something that was pretty funny. One of the essential jobs to the economy right now, given everything is shut down, was announced as Forex traders.
Nice, because we're picking up the slack over here. That's what we do.
It's so funny.
That is
very.
Funny.
That's a little. We're gonna get onto the charts, but we wanted to just give a little bit of background. Obviously, I met Nick through a friend. Me and Nick first came together. We obviously both were passionate about trading. But at the same time, we were just friends. We came together, we're hanging out, doing putting in chart time. I think it's important to have fun, especially with, sitting in front of a chart and sitting in front of a computer for hours on hours and hours is not the most favorable thing to be doing. I think the end goal, with the ability to have your own business from your laptop with unlimited potential in regards to, the cap as what your income can be, there's definitely a good result that can come of it. But we have to be mindful of, during this time when we're learning, I think the most important thing is to consider, your mental health. Consider how you feel during this journey. You don't want to give up just because you feel alone. You know what I mean? So definitely try to, join some sort of community or do what I did. I told a lot of people that I was trying to learn Forex, even though everyone told me that I was an idiot. And that ended up leading me to finding Nick just because I was putting it out there that I was doing it. So someone was like, oh, I know someone else that's doing it. Like that never would have happened for me if I just was like in my room only telling myself I'm learning Forex. Like I put it out into the world that I was.
And that's a really great point. Guys, put yourselves out there. There are traders in your area. There has to be, I'm sure of it, probably within a 30-minute range of you. Get on LinkedIn. Start making posts about Forex. Put it on your Instagram. Put it on your Facebook. Just connect with other traders because it'll really accelerate your trading. Just if you have somebody who's
you were doing that too. You were putting out posts on LinkedIn and commenting on people's posts and stuff.
Yeah, exactly. I met a lot of people, a lot of traders through social media. They weren't close to me, but I was posting stuff on LinkedIn. Yeah, just commenting on other stuff, going on pretty much anything. Instagram, messaging every trader that I saw. Like, guys, you got to be active. If you're passionate about trading and you really want to learn, pursue it. Pursue that knowledge. People who have it, chase them.
And just leading off of that, if you really do love the idea and the analysis, like getting into the analysis and learning about how to mark up charts and obviously find favorable setups and to make profits, you're going to find a strategy that works for you. You're going to find a way. And I think the most important thing for me at one point was I had I had learned from someone, I had some success, but I still wasn't consistent to the point where I could be, happy with what I was doing. And at that point, I was like, I'm going to literally find whatever it takes, whatever way I need to analyze, whatever strategy I need to use that works for me, not anyone else, that works for me. Like, I'm going to sit on the chart and I'm going to figure out what way works for me, and I'm going to find a way. And I think at one point it's important for you to sort of have that mentality and to go into it like saying fuck it and really focusing on another thing is like, don't focus on the profit, focus on the pips. If you can make 20 pips, those 20 pips can become a large amount of money based on the lot size. But if you can't make 20 pips, it won't matter. Like, focus on the skill, focus on the actual, what you're doing, the actual performance of your strategy, of the way your thinking process in the market. Like, focus on that. Don't focus on the profits, because the profits is just the result. The result will always be there if you focus on, what you're doing, what you can control, and the decisions that you're making, in that moment. So let's go into, if you could, you want to comment some on that?
No, I think you nailed it. I was just going to read the first question, first couple questions.
Yeah, let's go. Or I guess, how do you analyze the market so good?
Practice, guys. Practice, experience. Like, realistically, I have probably like 4,000 or 5,000 hours on the charts at least. Practice. Stay on the charts. Back test. Like, you guys really got to put in time. Like, no one's born just a great trader. No one's born a professional athlete. Everything requires practice, persistence, dedication, discipline, and all these small choices add up to a lot. So, the better, just the more you put in now, the better you'll be in the long run. And that's, I think that's pretty consistent with anything for the most part. Would you agree?
That's it. I mean, you got to practice, but at the same time, you got to be practicing in a way that's productive. You got to figure out different ways to go about practicing whatever strategy you have, back testing. Like, don't just think just because you're reading all this random material that it's going to add up to something. That's foolish. And I think that's what turns a lot of people off, is they read, a bunch of different stuff from different books, and they are looking in all these different places, YouTube, this course, this course, this course. And then like 2 years in, they're like, well, I know all of this information, but I'm still not having success. But that's just because you didn't master one thing. You didn't focus on one thing, right? You just know a lot of shit, but that doesn't actually equate to anything.
I'm actually going to comment on that, because that was something that I, fell victim to in my first year, as I was trying to learn all these different strategies, and I was adopting a different strategy. It wouldn't work. In a couple of weeks, I would abandon it, pick up a new one, abandon it, pick up a new one. And that's not at all, because there is no secret recipe. Back to what Angelo said, is you got to find what works for you. You can use all these different resources and kind of craft your own style of trading. So like Angelo and I, here's an example. We're both trend traders that focus on price action. We both made the course together. The information that we go by, and our knowledge is very similar, and our trading is similar. And we look at some of the same things, but we do have small differences. Angelo will trade a little differently than I do. Maybe he'll hold a trade shorter. Maybe I'll hold a trade a little longer. Maybe he'll execute on something, a little different.
Our confirmations are just different because we have more time logged with different tools.
Exactly. And that's not wrong and by any means. No. It's what works for you. And he's confident in the way he trades, and he trades great. And I'm confident in the way that I trade, and I trade great. And it works. It's a good dynamic. And that's what I think. That's one of the biggest misconceptions, is everyone's in pursuit of this perfect strategy per se, when there is no such thing as a perfect strategy.
No.
So let's keep going. Okay. If you could use only one time frame for trading, which would it be and why? I would use the 4 hour. That would be me, because I like it. The 4 hour it forms great structure for the pairs that I look at. I like holding trades for a few days, and the 4 hour is great for that. And I can also see, like I said, good structure and confirmations on a 4 hour candle. Now, granted, I would never just trade based on one time frame, because that's just, you don't need to do that. There's better ways to trade. But for this question, it would be the 4 hour for me. What about you, Angelo?
Yeah, I would say, fairly similar. I actually right now, I like looking at the weekly time frame, for the pairs that I'm looking at, and we'll get into what our favorite pairs are. I like looking at the weekly, and basically it's really whatever time frame I can see structure the clearest on. There's no direct answer per se for me, but definitely, 4 hour and above is the way that me and Nick trade.
Yeah.
Overall.
Higher time frame, more significant price action. It just means more. There's more data in there. and just bigger moves. So 4 hour plus, that's really what I focus on. Basically, what's the perfect time frame to enter the trade? So I will only take a trade on the 30-minute or 15-minute. I won't execute on anything higher than that because you're missing data. If you're taking a trade based on a 4 hour candle or a 1 hour candle even, and you haven't dropped down timeframes yet, you're missing data. You're missing what's actually going on a micro level, which is where you want to execute on, right? You want to catch those micro levels first that then turn into a larger move. So I always execute on the 30-minute and 15.
What's up, Edward? Thanks for joining, bro.
Top 4 pairs you'd like to trade. You want to take this one first?
Top 4 pairs. Yeah, top 4 pairs. UCAD, USD CHF, NU, and number 4 would be GJ.
Yeah. Oh yeah. He's been doing. I can see that GJ for sure.
But the pair that I actually learned on was UJ, which is interesting. I learned on UJ, like that was kind of the pair that I was told to stick with and to just focus on. And then I actually grew to hate UJ because I just couldn't figure out, like, structure was crazy with it.
Yep.
But now I actually enjoy trading UJ a little bit more, I must say. So yeah, UJ would definitely be in my top 4. So it would be USEF, UCAD, NU, which I didn't start trading NU till like a year and a half into trading.
Yep.
I didn't even look at NU.
Love it.
And now I love NU. And then UJ and GJ as well. GJ's grown on me too. I can just have some good confirmations on there. So What about you?
I personally like trading USD pairs the most. I just had the most success with them. So I like AU, I like NU. Those two very much. Love those. And then I also trade a little bit of NCAD. I've been liking NCAD a lot recently. And then gold. I used to trade a lot of gold. Now I just, it's moderately trading gold, but I've always loved it. It's treated me well.
Yeah, you've always traded gold. So yeah, those are the 4 pairs. Which is more effective, long-term trading or short-term trading?
Again, this kind of goes back to what we were saying. You have to figure out what works for you. There's a reason so many different types of traders exist. You have scalpers on the most extreme, the micro level. Then you have position traders who are basically just long-term investors who can hold for a few months. It varies. It varies. I wouldn't say one is more effective than the other. I mean, for me personally, based on my emotion, my style, my tolerance, I like holding trades for 2 to 5 days, and it works great for me. That's just personally. That's what I've seen the most success with.
Yeah, I've actually been adjusting my style, considering the conditions that we're in right now, to align a little bit more with Nick's, a little bit wider stops, and I must say that it works pretty well.
Right. So again, that's a good example. He adapted his strategy based on something that he saw, and he made it work for him. Right. You can make these tweaks, which is great, because I mean, for the members that are in here, you understand based on what we teach that it can be applied differently, and there is room for there is room for improvement and your own application of
Yeah, I think like anything else, with trading is you just have to continuously be learning. I think that's the most attractive thing about it. If you're coming into it with that mentality that you want to participate in something that you're always going to have to be engaged in, and you're always going to be kind of getting something out of. That's why it kind of, for me, it excites me, is because there is always something to learn. I think at first, though, it can be very overwhelming because there's so much to learn to kind of get your feet, planted on the ground, to get grounded in what you're doing. So that's why I'd say, over the first year, the most important thing for you to really do is to understand the tools of technical analysis, right? Like the Fibonacci, what is support and resistance? When do I use trend lines, even though me and Nick don't really use them as much? Most importantly, candlestick analysis, breaking down candles. What does it all mean? Patterns are huge as well. Supply and demand. I think supply and demand is slept on. Even if you don't mark it up, supply and demand is key. And then, your key levels. What are key levels? Why do we trade within them, with those levels? How do you mark them? Key levels, support and resistance, a similar concept. But understanding that the decisions that you make, the transitions that you look for, if you're a price action trader like me and Nick, and you're a trend trader, they want to be made in those zones, in those key levels. You know, where are they, and you know, when should you make the decisions should be based on really where those are. So we'll go over later, I think, when we get on the charts a little bit about how we draw our key levels. It's fairly simple.
Yeah. And we'll do a fib tip too. So we'll move past number 7 for now.
Any tips on how to use fibs?
We can do that on the chart when you go.
Yeah, I'll pull up the chart.
And then we answered who are your mentors, right? We covered that one.
Yeah, we'll keep it in order.
Yeah.
At least we'll try to. We did answer that though. Who are your mentors? Nick learned from a lot of people. I learned from one mentor. And that was the thing. That's why I give you this advice is I'll give you this advice. I learned from one person, and even though it wasn't perfect, and even though it wasn't like my success curve wasn't like this, like it didn't go straight up. You know, it was like boom, it was like going waves, and then like I'd have a breakthrough and it would rise higher, like I'd level up. And then I'd dip down to like a level where I was kind of upset about, and then I'd go back and go a little bit higher. You know what I mean? But I knew that I was learning from someone who, you know, from my perspective was successful, his strategy and the way that he taught things. He had a lot of clarity as to the way he taught. So why would I switch up and go to another person? Like I knew it was me. I knew it was me, and I knew I needed to grow and I needed to learn more, and I needed more chart time essentially to be able to implement, you know, all the things that he was teaching me and be successful. Like it wasn't him. And that's what I think a lot of people do. And I'll get into this in a second, but I think a lot of people, you know, think it's the mentor's fault that they're not successful when they haven't put in, like Nick said, he's put in 4,000 or 5,000 hours of work. Like they haven't put in the chart time with what they're given. You have to internalize it. And I think that's with trading, I think is one of the hardest things to do is at one point or another, it's you. You know, you're the person clicking the buttons. You're the person with the account. You know, we're not pressing buttons for you. Even if we give the signals, you're pressing the buttons. You know what I mean?
The first step is holding yourself accountable.
It comes down to you. And, you know, I look in this one group chat that I'm in from a in-person course that I took. And even to today, they say in the chat, they're like, I regret taking that course. And then they'll go, yeah, but I met you guys, so I actually don't regret it. Like, what is the decision you're making? Like, what are you doing? Like, realize that in investment, whatever you invested, like just whatever you got out of it, even if it just was meeting one person, that's successful. You got something out of it. Yeah, don't undermine your decisions. Like, and don't be undermining your decisions 2 years later. Like what that means, like in your own head, your mindset is so, you know, your mindset is so fragile. Like you have no idea where you're going. Yeah. First of all, if you're questioning what you did 2 years ago.
You have to see it as every opportunity is, you know, room for progress. There will be something out of it. And it's mindset. You know, you have to go
don't question what you did 3 years ago. Decide what you're going to do now and be like, that helped lead up to this point. And then point your arrow in the next, you know, towards something in the future and go that direction. So, yeah, I mean, those people all bounced around with different courses and stuff, and they're all struggling because they didn't, I feel like, internalize it and challenge themselves. You know what I'm saying? So
again, it goes back to what I was saying too. A lot of people are just looking for this perfect strategy, right? So there was one person that went through a course and like, I need more help, and then we could see their progress, and they didn't even get through like an eighth of the course. They didn't even get through 10%.
Yeah, they were in the course like 3 weeks, and they're like, I'm not making any money. I need this for my other business. And I was like, you're so all over the place that honestly, I have no idea how to even help you because you can't help yourself. You can't you can't even sit still for more than 3 minutes. So how am I supposed to help you?
Yeah, and you didn't even go through the videos. Like you gotta do it. You gotta.
Yeah, there's more than enough information out there. You know, not only in our course, in other areas. And you gotta put in the, you know, you gotta sit there and you gotta put in the work and you gotta challenge yourself, because I promise you that in the end, the reward from you doing that is going to be so great.
So great. It truly is.
So let's look at the chat a little bit.
Yeah.
So we got John asking D, how do you deal with trades that go well into profit and eventually come back to your stop you out, even if it's stop? I mean, you could talk a little bit about like maintaining order rules, what to do, taking profits.
Oh, wait, who asked this, John? At the John. How do you deal with trades that go well into profit and eventually come back and stop you? Well, you could use a trailing stop. There's a lot of different ways that you could set up a trade. So the same confirmation. So like, let's look at this chart, for example. This is, US dollar CHF. So let's say we took this short when this support zone was broken after these moving average crossed, right? So we took that short and we're managing the trade. We see that there's a slight pullback, right? It's not giving us any. Can you wait, let me get the chart. I'm going to share my screen then. I want to cover managing a trade.
Yeah, here, share screen.
Let me just find a good example here. Okay. All right, cool. Yeah, this is a good example. Okay, here we go. All right, you guys see my screen?
Yeah.
All right, so let's say we took a trade right here, right? We see that this came back into this range, it bounced again, it crossed through the MAs, and then we had a little engulfing. Let's say we took this, right? Put our stop loss outside this higher low, and we're going to target up to this level here, this 61.8 for a retracement. This would be a counter trend trade, right? We're catching this pullback, and it's pulling back. So granted, this hit the TP, right? But here, so like we hit a lot of profit. It went up how many pips? Where'd it go? So it went up here. And then to answer your question, see this pullback? So a lot of people would panic on this pullback because you were up 200 something pips, and then it came back to 67 pips. So it almost pulled back 200 pips, right? So how do you not panic in that, right? Either you're confident and you move your stop loss to break even. So now it's a risk-free trade. You can't lose money on this. So this is where the psychology really comes into play. So now we're at break even. So can't lose money. But this trend is still holding. See this high or low here? This didn't break. This actually just formed a double bottom. So knowing this, after this push here, where's this replay tool? 1 second. So after this push, right? After this push here, let's play it forward a little bit. See price action coming back, right? So once this zone breaks here too, this is a minor level. This is minor support. You could close most of your position. You could close the position here, right, as it came back. Or you could just say, this is the absolute lowest. If this level breaks here, then my bias is going to change. This is the higher low, right? This is the last bit of support that will support this trade. And you just see if it holds. And it does in this scenario. But we're comfortable in this trade because, you could have taken some profits at 200 pips. That's recommended, close maybe half the position, maybe 60%. It's a risk-free trade. So you should feel calm, right? Don't feel greedy. I mean, if you're trying to catch every pip, 300-400 pips, you're probably being greedy. Take profit.
Yeah, don't be taking trades like this is your last trade of your life.
Exactly. Like there will be thousands and thousands of more trades in the future, and you just can't feel a type of way because you stalked this trade out, and now it's giving you.
That also comes back to you wanting to be right based on the fact that you haven't had the success that you inevitably dream that you'll have. Like,
exactly.
Get this idea out of your head, and don't annotate. Get this idea out of your head that at one time that will be it. You know what I mean? You're a freaking human being, and this is a chart that changes literally every single day, the conditions.
Yep.
So you have to continue to remain flexible in the situation. And I think that's the growth that you have to go through. Like with Nick and me, when we do the Sunday Market Blitz, we'll forecast multiple ideas, and we're not in love with either idea. We just make decisions based on how things execute.
Yep.
Right?
Yep. Exactly. So price action is coming back to the 618, right? This is a hot zone for a reversal. This is why this TP was, picked. So you could either close the position or close most of it and leave a little bit running, because if this does continue to push up, then you're still managing. And then you just move your stop loss up, right? Move your stop loss up to a structure level right here, just outside the 50. And then this is just going to keep going until, we see a major level break. So this is bullish until this breaks here, this minor support. So that's how I'll manage it. Just, don't be greedy. If you're seeing that you're up a lot of pips and it's at least a 2-to-1, take some profit, manage the position. Don't sleep on a trade with your original stop loss. If you're already up a few, 50, 60 pips, move your stop loss to break even. Don't kill yourself. Don't.
If you're taking a really rules-based approach, you can you can say whenever I go into profit at a 1-to-1, so say my stop loss is 30 pips, I go up 30 pips, then I either move my stops to break even, so I secure, minimizing my risk, I secure a break even trade, and at that 1-to-1, maybe you close 25% every time. No one ever died securing profits.
Exactly, and you'll
And this
never go
isn't your
broke
last
taking
trade.
profits either.
And inevitably, you want to hold these winners as long as possible, even if you're only holding 25% of the original order.
And that also has more of an effect. There's more than just the monetary, value that you're getting from the trade. Even if you leave, let's say, 10% of the trade running, you're practicing psychology and how to manage a trade better. And it's only going to make you better at managing a position, and you'll be calm. You already took some profits, so your whole mindset is like kind of different after you've already taken profits and you're just managing a trade. You feel good about it. You don't really care if it continues higher or not, but you're still optimizing the opportunity. So
let's go back. Let me I'm going to share my screen again.
Yeah, go for it.
We're going to run through the list. I know people got some questions in the chat, but honestly, the questions in the chat are going to be fairly similar to the questions that we go over in the list.
Yeah, let's just get through some. We're kind of
So we're gonna stick to the list because we're just gonna pretty much go over all the questions in there anyway.
Right.
Let's see.
Where were we at? FIBS? Any tips on FIBS?
We're on, any tips on how to use FIBS.
Okay, so this one we could.
So I'm gonna go over real quick, tips on how to use FIBS. Let me close this so we got some room. First, you want to use FIBS on a time frame that you can see structure the clearest. Yeah, Prachi, if you just read over the questions, if you guys, these monthly, weekly key levels are already a question on here. So yeah, we're going to go over them. So let's just hop on the chart. First tip for drawing FIBS, obviously this market is very overextended. I'm just going to bring this back a little bit like this. I take this off. First tip, find a time frame where you can clearly see some higher highs and higher lows. Right? You don't necessarily want to be measuring, again, actually, there's another tip too. FIBS on the daily, 4 hour, 1 hour. Okay? Use FIBS on those time frames, daily below. Don't use FIBS on the 5-minute. Don't use FIBS on the 15-minute. Those are not time frames you should be using FIBS. Use your overall technical analysis. The way that we teach, 1 hour, 4 hour daily time frame, right? With that in mind, go on the daily time frame, go from the weekly to the daily to the 4 hour to the 1 hour until you can see structure, very clearly. So we're just gonna go, for example, on USD CAD, we're gonna come back to this instance where we can very clearly see structure here. I have a supply zone marked right here, but I'm just gonna take this off. So pretty much price at this point was forming some highs, formed this higher low, and then it broke to the downside. So we had broken this level right here. This was a little bit, or a break of structure. What is the first thing that we're looking for following a break of structure? We're looking for the first formation, our first lower high, right? Especially in this instance for a downtrend. So what I would do with my fib is I would bring it onto the chart. I'll fib from my high to my low. I'm always going on the wick of this first bearish candle that starts the push. Right. So I'd start here. And then as I'm coming down, I'm looking to see where we find support. So we have a bearish bullish candle at this level, but barely pulls back. So that doesn't matter. We're going to keep going down. We have a bearish bullish candle at this point. Price doesn't manage to make any sort of retracement. So we keep going down. Same thing, price doesn't manage to make a retracement, fails. And then inevitably we get this double bottom at the end, at our weekly key level. And then we find support at this area, a little double bottom. And that's when we start to come up and we're starting to look for, that first lower high in this instance. And we're retesting this level. So that's just how you draw a fib. You're drawing it from your previous lower high to your lower low, in this instance in a downtrend. And then the main levels that we're looking for are 38.2 and 61.8. And obviously the way that we teach is to draw like entry zones. So say price, was at this level down here. What I would do based on putting my fib on the chart now is I would look for an area with multiple confirmations. So I would say, okay, at this 38.2, we have the 200-day moving average. and we have 38.2. Those are two confirmations. If we get a third confirmation, potentially we'll look for short opportunities. What would be a third confirmation? It would be some sort of bearish signal, right? So price comes into this area, waiting for our third confirmation. This is not an evening star, don't be fooled. And then boom, we get this. So we're failed. We don't get our third confirmation. So we're not looking at the 38.2 now. If I was doing a new analysis, I know that this level previously was our, previous lower low was our previous level that broke. This is definitely a structure level. We're retesting that. We have the 618 at this level too. 618, 38.2 are definitely our two golden levels. If we get a third confirmation at this level, then we'll think about, shorting the market. And we get this. And this is just like I would just run through, this is kind of like an exercise as you're back testing that I personally would run through is, okay, now we have three confirmations. Then I would bump down to like the 30-minute, start to look at the 30-minute, see what that larger candle means. Where's the break of structure on the 30-minute? All the way up here. And then we're getting all this confluence, for some sort of potential opportunity at this level. So then we would think about what are our entry rules. One of our entry rules is like bearish engulfings through the moving averages, which obviously we see there's some of that here, but there's, obviously other things that we look for too. But yeah, that's, pretty much just drawing your fibs, kind of just as simple as we can possibly get it is go to a time frame. I'll go back up to this daily time frame. Go to a time frame, daily, 4 hour, 1 hour, where you can clearly see a trend, clearly see a trend going on. In this instance, we're in a downtrend. Draw from your low or from your previous, lower high to your new lower low. Identify whether you're in an uptrend or downtrend, and then look for that first lower high. Look at the lower highs at these levels: 38.2, 618, 786, 886. Yep. Ultimately, at the top, is a demand or a supply zone. All the way up here. So that becomes like another confirmation you can look for. So yeah, if there's anything you want to add to that.
No, I think you nailed it pretty good. I'm just going to get off this next question.
Any books or videos you would recommend for new traders?
Yeah, I would say Candlestick Bible. Yeah, for sure. And then also the Naked Forex, probably one of the better books if you want to show some.
Yeah, so in our course, we have a bunch of these books. The main ones that we would, as he said, Candlestick Bible.
Very, very good book.
We have that one. Candlestick Bible's good. And then Way of the Turtle.
I mean, these are all great books. There's just these two that stick out among the rest. It's Naked Forex and Candlestick Bible for sure. Any videos?
I'll bring this one out. Obviously, anything Mark Douglas is going to be good. Trading in the Zone, everyone talks about that. And then The Disciplined Trader is another title by him. And then another book that I'm going to bring out is just Ray Dalio, Principles. He was a trader that started a hedge fund. So I think that's something that is pretty inspirational that you guys can read about. And relevant. That one also talks a lot about like behaviorisms and stuff. If you're interested in stuff like that.
Hell yeah. So that's a good one. How do you find specific key levels? So I guess we could just talk about how we find our SR levels.
Yeah, I'll show you. What's the name again? So these are the books. Disciplined Trader, Mark Douglas.
Hey Nick, can you cover monthly and weekly key levels around? Yeah, of course. We're gonna get into that right now.
Yeah, I'll do an example, then you could do a quick example. And then Principles. Again, these aren't books that are specific to us. These are books that I think most people know about. But yeah, we've read those. We read over those, and those are books that we definitely recommend. So back to the chart here. We're gonna just go on to a random pair. Or I guess I'll do EU, or actually I like how EU is looking. I'll do AU, remove all these things. For key levels, first of all, I mean, to draw your key levels, you need to know how to draw, what to look for with support and resistance, right? What do I look for when we're talking about support and resistance? Obviously, me and Nick will draw our key levels all the way from the monthly time frame. Like those are my key levels are monthly and weekly. Like those are the key levels, right?
Yep, absolutely.
Where do we draw them? You know, we're always going to come on to the line chart when we draw those. What are we going to look for? We're going to look for, you know, one of three situations. We'll look for a touch, gap, or overlap. You know, that's something that we teach in the course. You know, what is that? That's when price comes on either side at a point and either does this, touches. So if we come onto the chart, you know, let's look for a scenario where price on either side, you know, touches like a range. So right here, we can see price is forming some highs, you know, continues to reject this level. Then we break above that level, come back, we find support. You know, this I would consider a significant level. Why is that? That's because on either side of the market at one point, there was enough money, you know, there was enough buyers or sellers that came in. There was enough orders. I like to call them like order zones. There was enough orders that came in to drive volatility, you know, to drive price, liquidity, to drive price a certain way. So we want to be looking for, at least for our strategy, for price action confirmation in those zones so that when we do catch these transitions, inevitably, you know, they're intraday moves, and then we do look to swing our intraday moves, you know, our intraday moves, you know, into swing trades, like to hold those into swing trades so we can obviously get more risk reward, right? So this is just one example. You know, if we come onto the bar chart, we can see that, or the candlestick chart, we can see, boom, you know, all these at this level, evening star, you know, we're getting rejection here. I would consider this like a bearish variation, another bearish variation, and then on the flip side, bullish engulfing. So I would definitely consider this to be a key level, and it's not an exact price. I'll draw this. I'll then come onto the chart and I'll draw this like you know, horizontal box, and that's because it's not like the line we're looking to touch. Like that's stupid. We're looking for price to be in this zone previously where it has shown rejection or support multiple times, and as we come into this zone again, you know, and we're looking at lower time frame structure, like say we're up in this level. This is a very good example. On the daily, we're clearly seeing the market is descending, right? We're forming lows, lower high, low, lower high, low. What's the next thing we're looking for? Inevitably, we're looking for that lower high. So as this market retraces, like say we bring on our fib, and this is, I actually went over like a really good example of this with UJ. Say we bring on our fib, we have this key level in mind. You know, as price comes into this level, we're definitely looking to take opportunities. So as price is inevitably in this uptrend on a lower time frame, let's bump down to the 4-hour and take a look right here. So the 4-hour time frame, and I'll bring on my fibs. These are these MAs. These MAs aren't actually the ones that I normally use. I was just testing something on here, but basically, you know, on this lower time frame, you know, look at structure, how it's forming on the 4-hour. The 4-hour is forming some higher highs, you know, higher low. We're retesting these highs, forming a new higher low, makes a new high, makes a new higher low. Then we fail, you know, then we come down here, then we're breaking this level. So inevitably, you know, we're looking for an opportunity in this area, and we could go as far as to all the way down, you know, to the 1-hour time frame and be in this area. So let's go all the way back. And if you guys don't know, we can go back to the 4-hour, back to the daily. I'm just going to use the replay tool just to, so I don't have to scroll back all the way. We'll see if we can actually get, yeah, we can. So if we were, you know, we're in our zone, right? We're back, we're up in this area, this blue zone that I've drawn. And now we're on the 1-hour time frame, as opposed to being on the 4-hour, because we know the importance of the area that we're in. Now in the 1-hour, I can see, you know, 1-hour higher high, higher low, higher high, higher low. And then this happens, you know, we get a break of structure right here when price breaks through this level. And then what are we looking for when we get a break of structure is we're looking for the formation of our first lower high, you know, and where would I, based on where price previously was and based on our fibs, you know, where would I be looking inevitably to get into entry opportunities? I'd be looking at the 38.2, the 618. You know, say I take a little position at the 38.2 based on something like this, which isn't exactly any sort of entry that I would get in on. Personally, just because I use the moving average a little bit more. But say I got into an opportunity based on like in this area, I had stops, I had entered based on like this bearish engulfing. I put stops above this previous level. Say I got stopped out, I'm still in this position. I'm still aware of where I'm in. And then we double top up here. Next opportunity comes. We get some bearish engulfings. We get some bearish variations here. Inevitably, we get a bearish variation here. And then I hop back into this order. We're using this lower high as a point at which if price breaks here, because we're breaking back through the moving average, and I explain in more in depth the moving averages. The moving averages, I believe it's a question on here. That's the only indicator we use.
Yep.
And the moving averages are pretty important. Nick always used the 200-day, and I never used it. And then I actually brought it into my strategy, and I must say it has definitely helped.
Yeah, sure. Definitely.
Yeah, it's definitely helped. So yeah, then you just use your stops, above a lower high, because if it breaks, that you don't want to be in the trade anyway. And where do you target? First level, for me would be a target maybe 0%, or look previously on like a higher time frame. Look at previously where structure was. I see a level of structure based on this pullback. Based on support here. I would say level of structure like here based on this zone, or even lower. You could use the -27. I know a lot of people use that as projections. I'll use it as well, but mainly for projections, I'll use previous levels of support. So this was a level of support, and then this was a level of support. Keep it simple.
Yep.
Keep it simple, stupid.
Absolutely.
You got these two levels down here. We'll target those. We'll maintain this trade. We can maintain it, one of two ways as the market continues to make structure. Like, say we did actually enter, up here, and then we start to go into profit, and we get back to the 0% level. One thing I'll do, because we're not moving our FIB yet, is I'll use this 618, for our stops. So we're in a considerable amount of profit here. We can either at this point use the 38.2, which we're protected with a 200-day moving average. We're protected with this previous level of support, now term resistance. We've got some confluences there. And we see what price actually does. It actually comes back, to retest this level.
Right.
Or considering how much in profit are we at this point? We're up a considerable amount, realistically.
Yep.
Up a considerable amount. Maybe we consider like going down even to like the 5-minute, seeing whether we wanted to close based on like very minor breaks of structure and stuff like that. So there's a lot of ways you can maintain these orders. Once you're into them, you just want to understand fundamentally like what are the rules that you're going to live in, that you're going to go by, and you have to stick to them.
Yep. We could also, let me answer this question too, how to avoid stop hunting by market makers. So it all comes down to where you place your stop loss, obviously. Now, if you're choking the trade, if you're trying to force a 2-to-1 risk reward and you're trying to adjust your stop loss by bringing it lower just to get that risk reward, to make it look like a better trade, it's not really how you want to do it. You want to make sure you want to base the trade off a comfortable stop loss. So notice here how he's outside of the 61.8, right? He's outside of structure. He's completely where price has not been since, almost a week prior to that. So this is really a strong level. We've seen those, after he saw the confirmation, he entered on, and then he moved his stop loss outside, completely outside this lower high. So he's not choking the trade. He's not forcing the trade to fit what he wants to see. He's just applying it logically, where structure would be broken, and that's where you want to put your stop loss, outside of that level.
And again, how do you perfectly manage to find your TPs? TPs, once you did all this work to get into this trade, say you just get into this trade now, you have your stops at this point. Realistically, ideally we're targeting 2-to-1. 2-to-1 is like around here. 2-to-1 risk reward. You win these over and over again. You only need to win 4 out of 10 trades for you to break even, realistically.
Yep.
Right? But that's the goal, isn't to just hit a 2-to-1. The goal is to maintain these orders, into these lower levels.
Yeah, you want to maximize the amount of profit you can get.
Yeah, you want to maximize the amount of profit you can get. So again, you know, what can you say? Do it if you don't mind. How you set them because you use round numbers.
How you do it, if you don't mind.
Yeah, Nick, you wanna just hop on the chart because we'll be able to
Set
wrap
what?
up.
Oh, set the levels, like support and resistance. You mean, Christy?
Yeah, she asked. She's the one that asked about the key levels.
Okay. I'm gonna pull up a new chart then.
Sure.
All right. I'm gonna pull up a clean chart.
And then, so we're gonna try to, you know, we got like 10 minutes left.
Yeah.
We went over how to avoid stop hunting by a market maker. Again, put your stops in a place where price previously hasn't been, you know, considering the point of structure that you're, you know, shorting at or longing at, you know, taking your position on. Let's see. What else? How do you
so
trade?
the whole point of the whole numbers is why I like rounding off the whole numbers, is because they're psychological levels as well, right? So these are levels where institutions can place giant orders, where people psychologically react to those levels as well. So like here, because it looks more important as well. So there's a lot that goes into it. So here, let me mark some up and I'll explain why I'm choosing these levels. Oops. All right. So again, back to what Angela just said, we want to find areas where price action is touched, gapped, or overlapped. So this one looks good right here. And look, right at 12.5. I didn't have to adjust this one. So I see that there's a bit of a gap here. Touch, overlap. This is a good level, 12.5, right? And it's a nice whole number. So I'm going to do one more level and then I'll explain why it's a good level. So this one looks pretty good too, right at 105, right? And then let me just show you on. So let's say, I'm going to drop to a weekly. Let's say price action is, yeah, clearly it's ranging. See this? How price action is ranging between these monthly levels. I'm going to go ahead and mark this here. And it just keeps things simple, clean, and logical. So, okay. And I'm just going to highlight these areas just to give you guys a better visual. Okay. And we're here. Okay. So, you know, as price action comes into this level, you know, we know this is a major monthly level. We've seen that it's been ranging, right? Let's say price action is here. We've seen that it's bounced a bunch of times in here. So it kind of like solidifies why this level is so good, rather than making it more confusing and making it some random level, right? You want to keep it nice and whole. It's a nice psychological level. Institutions place their orders here. And you can actually see this reaction. So like price action passes it a little bit, right? And then comes back, gives plenty of confirmations on each side, right? Bullish here, bearish here, large exhaustion. So that's how I'll use them. I mean, I don't put too many. Again, I'll only use the monthly and weekly levels. I won't go too nuts with it.
Yeah, try to keep your charts as clean as possible.
Yeah, I mean,
try to keep your charts.
This is one of the first lessons we teach in our course too.
Also, you know, look at where he's put in these monthly levels. Look how the huge wick, you know, consider how price has previously reacted. What is this, UJ?
Yeah.
UJ has rejected that 125, 114 area. You know, this is the weekly. It has rejected it so many times. So as price comes back into that area, who are we to say that price is going to break through, right? Yeah. We're going to use what, you know, previous data is telling us, what previous resistance has shown us over and over and over again. We're going to go with the pattern. And that's why, you know, last week, you know, what did we do is price was coming back into one of those monthly levels. And I had seen an ascending triangle, which an ascending triangle is a continuation, you know, pattern, but we were right below that monthly resistance level. So I'm going to always consider that highest time frame, that monthly level, to be more significant because more orders have come in previously at that level. And I'm going to be patient and I'm going to wait for that bearish confirmation instead, which we did do. And that's the signal that we put out, and, you know, it went into considerable amount of profit. So yeah, you know, definitely better to explain things as simple as possible. So that was good. How do you know when the right time and level to enter into a trade? Again, we use our key levels. We use our zones, guys, in 4-hour only minor levels. No, I'd say significant levels of structure, the way that we teach it in the course is using FIBS, but also using moving averages. When 38.2 is hit, but either gets to 0% or beyond that to our projection, that then becomes a level of structure, a major level of structure.
Yes.
But we don't want to get I'm not going to get too far into this right now.
No. Yeah, we'll say that for another webinar.
So we'll save that for another one. During a world crisis such as the coronavirus, with so much uncertainty, which type of trading style would be ideal? Fundamentals, technical analysis, or both?
Okay, this goes back to finding a style and adapting to what works for you. So in a time of heightened volatility from news, you obviously want to be looking at the fundamentals. Not necessarily taking trades based on the fundamentals, but you want to make yourself aware of the sentiment. If some really bad news comes out for the US dollar, it's probably going to be bearish for the week, but it doesn't mean immediately short. It just means now you have some more information so you can better set up a trade potentially, to short. And same goes for the opposite. If really good news comes out and we think that US dollar is going to be bullish for the next week, depending on Fed cut or something, or, a stimulus bill, or just extra demand for the dollar, we're going to have a bullish bias for the week. Again, you don't buy it immediately. You just have more knowledge so you can set up your trade better for a bullish outlook and a long trade, essentially.
Yeah, don't let yourself get fooled. Definitely keep in mind the fundamentals. If, for example, like the stimulus package got put into law and that was positive for the USD, but at the same time with so much going on around the USD, so much uncertainty, it wasn't enough to really make USD last week bullish, to really change the sentiment. So, you shouldn't just be bullish based on that one event. Right. And that's why I think at least for us, we're mindful of the fundamentals. Like, let me get into, like, we're putting out this fundamental analysis, and it's important to, keep up to date on everything that's going on. But we're executing always with technicals.
Always. That's our main, that's at the front of our entire strategy. Technicals first, everything else is kind of secondary, but still, a factor in our trading.
Yep. Yeah. So if we can't see things very clearly based on fundamentals causing a lot of volume in the market, we just won't trade. Okay.
Yep, exactly.
And that's, when we look at some of the signals that we had given out previously, some of our previous trades, there was a week we didn't trade, and that's just because we weren't certain as to what the deal was. It was like the week before coronavirus where things got all settled.
Uncertainty.
We just didn't trade, and that felt good because it's the same thing as like the saying not answering is an answer or something.
Yeah.
You know what I mean? Like not trading is a decision, and you should be happy with that.
And that's a big part of trading too, is knowing when not to trade. Is when you've reached your tolerance level and and you can keep good discipline and say, I'm not gonna trade because these aren't good market conditions. I don't like what I'm seeing. There's a heightened amount of risk when something like that's going on, and you gotta not force any trades.
My sister sent me a picture of my dog's butt.
Oh.
All right. So to wrap up this session, real quick, basically, we're gonna wrap this up. Yeah. This is what we got going on right now.
Yes.
Full course membership is 40% off right now. It's $299. What are you gonna get inside of that? I'll just show you guys real quick. What is actually inside of the course. I'm not gonna go through it because you're just gonna screenshot it, their videos, whatever. So yeah, like the full course membership is what our students have. Obviously, from the testimonials and everything, they've thoroughly enjoyed and they've gotten a lot of benefit out of. They've got a lot of value out of it. What is actually in there. If you're a beginner, you can come in. The beginner section. This is basically like for beginners. One little tip. Don't spend all your time on baby pips learning a bunch of bullshit that doesn't mean anything.
It's general knowledge. It's not a strategy. Nothing structured there. It's just all this information.
You don't need all this information for what? So you can go tell your parents that you know what Forex is?
It's like, hey, man, I can use Bollinger Bands and Ichimoku at the same time.
You don't need that. You need to be on the chart so that you can start to learn how to execute an order so that you can actually have your account grow, and then you show your parents your account. and then you're like, look at my account. You don't need to win arguments. You know what I mean? That's what people like spend so much time on baby pips. They're like, I'm learning on baby pips. Like, no. So yeah, I'll get into the Discord chat in a second. So this is your beginner course. This is all you need to know about Forex, the background. And then we get into getting started trading is going to be setting up trading view, setting up, your computer with the applications that you need, setting up your broker, everything like that. Then we'll get into the basics of technical analysis is what me and Nick talk about.
Yep.
First thing you understand, how do I identify market structure, support and resistance? What am I looking for? Trend line, supply and demand zones, Fibonacci, time frame correlation, probably the biggest video, even though it's short. Time frame correlation is huge. Then you'll have some homework. We'll get into our trading plan. Trading plan is a 35-page, guide that me and Nick put together. I actually put it together for myself originally because I had sticky notes all over my room and like a bunch of notebooks, and I just consolidated everything into one place. So this is what I recommend, like people print out, and people that are in the US, I actually just ship it to you.
Yep.
So that's, getting into the trading plan, trading journal, no problem, Alcatel. Getting into the trading journal, you should log your trades. How do you do that? Blah, blah. Yeah, we can get you a book, Elizabeth. And then week 4, top-down analysis, examples of entry zones. So just more advanced technical analysis, putting together those simple things you learned in week 3 right here, putting those together into trying to assemble that into like a strategy, right? Putting everything together. Risk management, which is huge,
Yep. That's everything.
Risk management is important videos for sure.
Yep.
And then week 5 is going to be, how do I start to operate as a Forex business? Convergence, this is kind of our whole strategy. And then back testing, how do I start to back test the strategy? 2 videos on that. Pattern recognition, again, big video. Yep. Index analysis, which Nick uses. It's the dollar index. Where's USD going? Especially right now, so important to be looking at that.
Yep.
Fundamentals, little video on that. And there's actually a full fundamental course that we're adding to the course as well. It's like 12 lessons. So that's huge. And psychology training, we feel like these were all, very important topics to go over.
Also, guys, there's quizzes and practical quizzes with each of these sections. So you'll be tested. Click the fundamentals one, yeah. So then we got a quiz on the video you watched. Make sure you pass it, right? And then there's, in some of these videos, there's practical quizzes. So like for FIBS, you have to then identify, which is a proper fib placement and which is not, and so on. And so you can check yourself and get little progress reports along the way as you progress through the course. So it's very involved. There's a lot of stuff in here, and it's very structured.
Yeah, that's why we're getting good feedback on it, because there's a lot of good information in here.
Yeah.
For sure. There's definitely a lot here for you guys. A lot here for you guys to make progress with, and obviously all the webinars. So.
Oh yeah.
Back to this, 50 plus course videos. All the webinars are recorded, and then the weekly trade reviews. Then obviously, let's just take a little look real quick, because we're going to end this at the actual chat. In the chat, these are free, public, Forex, analysis, crypto, and then these are paid, member signals, premium analysis, fundamental analysis. In the members chat, obviously that's our private chat for people in the course. You can message us, whatever. There's other traders in here as well. This is where we'll post the links for the trade reviews, for the webinars. We'll ask you questions, stuff like that. Signals, these are obviously, we'll give out signals. These are how we give out our signals. We'll give an entry. You're supposed to enter right there. We'll give the stop loss, multiple take profits. Why is that? That's because at these levels, that's when me and Nick are monitoring the trades to, see whether to exit or take profits and stuff like that. We'll follow up with all the orders, when to move things to break even and stuff like that. And yeah, so that's obviously the signals. And then premium analysis, when we're looking for trades, we'll put out some lower time frame analysis in here, like just as me and Nick are going about our day. Another new thing that we're doing is the live sessions. For now, they're free. So you guys can come through. They're Tuesday, Wednesday, Thursday, anywhere from like 9 to 10 a.m. So we'll go over all the trades we're looking at for the day in the live sessions. They've been going pretty well. So, definitely come out to those. We'll post the links in Discord. And then fundamental analysis. every day we'll give out, and there's just a lot. There's so much more in here than that, but
Yeah.
every day we'll give out like 2 analysis, sort of like this, based on fundamentals. So I know like a lot of people will just post the like schedule of the high impact news events, and they'll be like, these are the events. But this breaks things down, actually explains it to you, you know, what's going on.
Right.
We have someone who is a very good fundamental trader. He also will give signals in here too. So there's some bonus signals that get put in here. So yeah, this is, you know, this is part of the fundamental premium analysis and the signals. That is all part of the our signals, right? That's
He's
all
also
part of
asking
our,
about one-on-one time. So that's
yeah,
available too. Once you get through a certain part of the
yeah.
course, you can schedule calls with us.
So
And
this is everything that we have. Premium signals, 75 per month, full course, 499, everything included, lifetime membership, course videos, signals, one-on-ones, trading plan, private chat, everything here, you know, live webinar. And then right now it's 299. So this is the public, you know, free webinar. We're going to post this. Um, we're going to post this online. How can I join the free Discord chat? You know, the links are everywhere, honestly, to join the Discord chat.
all over our, yeah.
Yeah, they're all over our Instagram. You know, they'll be
Stories.
DM'd you. I'll drop a link in here. You know, for
Also on
anyone
our
that's
Telegram, the pin message.
anything that's scoping it out right now. You know, if you want to get in right now, but you can also, you know, come onto our website. You know, right here is the first thing. We got Discord. You know, we got Instagram, Telegram, YouTube, Facebook. You know, everything that you want is right there. And one more time, you know, these are the questions that were answered in here. Thank you all you guys for sticking around. You know, I think at the max we had like 60 people in here.
Absolutely. So I'm just going to drop our website too for you guys who want to check it out right now. forexleagueco.com. Just head over to the site. You can browse a little more, get a little more background information on us, and maybe some questions that we hadn't answered in this session. But again,
yeah.
thank you
And
guys
again, this sale that we have going on, there's only 3 spots left right now. This has been going on all week. There's only 3 spots left. So if you're interested, you know, hop in the Discord and shoot me a message right now. We have to go because we're about to do a live session with, we do these Sunday market blitz. We're about to go over all our analysis with the members. So we're about to do that now. You know, thank you guys again for staying on, and you know, hopefully we all talk again soon and come through the live session on Tuesday. That's going to be the next opportunity for you guys to get involved.
Get in the Discord now, guys, and be ready for that on Tuesday. So we'll see you guys in the community. Thanks for sticking around.
Peace out.